Hello, good morning, ladies and gentlemen, and it's a happy Friday to every one of you out there as I welcome you to yet another promising session on the morning live with me. Well, this is a special day, being the fact that it is the last trading day of both the week and the month of March, and this comes with some certain level of peculiarity that we shall be looking forward to today, as in the sense that there is a high chance that some volatility will be coming in the market today, and whatever direction this is going to be going is what we are going to be looking at today. And this has a psychological aspect to it, in the sense that during the course of the last trading day of the week and the last trading day of the month, there is a high tendency that majority of participants in the market will be moving in the opposite direction of the prior leading price action, and this is as a result of the fact that some majority who are taking a position, probably a buying position or a sell position at the beginning of the week or at the beginning of the month, whichever case it may be. On this kind of day, majority will want to be selling off to make some profit of whatever they had made so far, and as a result of this, we shall be seeing some price movement in the opposite direction. And what direction will that be? Well, that is what we are going to be looking at this morning, and we're also going to be checking how the market has been reacting to the gross domestic product. As you can see on the economic calendar here, we had a positive variance of 0.63, so it was actually beyond expectation on this case scenario. So we are going to be looking forward to see how the market has been reacting to this event. Then also remember, yesterday we had the GDP for the US docket, and what we saw yesterday wasn't that impressive for the dollar, but it's still on the positive side for the dollar. Actually, if you remember a couple of weeks ago when the Fed chairman was having his testification before the House of Congress, he was stating that to avoid further rate hikes, he wants to see the economy doing some dovish indications for the Fed not to increase interest rates. So this is more of a positive note despite a negative figure for the dollar yesterday. So let's quickly look at that and see the actual and the variance on that one. So I will be spooling out the economic event for yesterday, which is Thursday, March 30. And as you can see, we have the US gross domestic product annualized for quarter four coming in at 2.6%, which was below expectation. Remember, we had the consensus projection of 2.7%, so it came in with a negative variance of minus 0.52. So though it's more or less a negative figure, but it's coming in on the positive side with the intent of rounding off on the series of rate hikes in the economy. So with that being said, here we shall be diving right into the chart to look at how the market has been reacting. Since we are monitoring the GBPUSD, we want to see how the pounds has reacted to these readings from the GDP coming in from the UK docket. So that is that. And first of all, before I go into the detail, please, I would like to confirm that you can hear me and can see my screen, so that I wouldn't be talking into thin air at this particular point in time. So I would like you to give me some feedbacks in the comment section, so let me know that we are good to go this morning, that you can actually hear me clearly, please. I will appreciate some feedback, please. If you can hear me and you can see my screen, just type in hi in the comment section while I get prepared setting up the chart for our analysis for today. So if there is a breach in the sound at any point in time, please let me know, and I will just assume that we are good to go here. So the first commodity we are going to be treating this morning is the US oil. And on the US oil here, we if we look at what has been happening here since the beginning of the week, we actually have been profitable on this commodity since the beginning of the week, as we have been buying this the US oil. And in fact, on Monday morning, we were able to scoop in over 800 pips, like I said yesterday, as we rode the move all the way from the $69.80 level right into that $73 level, where the consolidation phase that lasted the last 4 days here started in this market. And so if I zoom into the current structure right now, that is where price action has been consolidating since Monday evening, you will see that we have a choppy scenario here, which further emphasizes the indecision in this market. And during the course of yesterday's trading session, exactly after the GDP from the US docket, we started seeing some bullish traction begin at around the $73.50 level, which was a level that we were using as a platform for buying opportunity yesterday. And in addition to that level, remember, we also were using this bullish trend line, which has been supporting that bullish momentum since the beginning of the week. And so with that situation we had there, so we were able to ride this move all the way to the upside yesterday, added one more position here. And if you had added another position at the breakout of the $74.35 level, at this point in time, you must have been taking out on all the buy positions in this market. So you must have made some couple of profits here, though it's not going to be as significant as what we already had on this commodity in the last 4 days now. Now that we are going into the New York session today, and the UK session rather, what is going to be our expectations here? Well, the first thing I would like to do at this point is to realign this bullish trend line here, and I think we should be using a much more higher time frame so that we can capture a much more wider view in this particular area. So I will be connecting the pivot lows here, and if we do that correctly, we should be having something like this. So we are still going to do some readjustment when we bring back our candle charts, but before we do, let's get this alignment right. Then we bring back our candle chart. Then I know it's going to be dropping down a little bit to the downside. Then we should be having something like this. So we have that bullish trend line, which has been supporting this bullish momentum since the beginning of the week. And obviously we know what we discussed about this current market structure yesterday. Since the beginning of the week, we said we are going to be using the bullish trend line as a yardstick for our trading activity for this week. And what this simply means is that as long as price action remains above that bullish trend line, we shall feel comfortable in our buy position. But if at any point in time price action breaches the bullish trend line here, that is, breaks through the bullish trend line, then we might likely be seeing a retracement phase coming in. And if you remember what I said earlier, I said most of the time when it comes to either the last trading day of the week or the month, we always and usually used to see an opposite movement in the opposite direction of the proud leading price action, as majority who are taking advantage of this bullish momentum here will want to be doing some profit taking activities. So let's see if this is truly going to be happening in this case, or we are going to be seeing price action do a breakout of the $74.35 level to inside another wave of bullish momentum at this point. So what I'll be doing right now is to scale down to a much more lower time frame, like the 1 hour time frame, and let's see how price action is really reacting to that bullish trend line. So if I zoom things in a little bit here so that we can see things more clearly at this particular point in time, you will see that since Thursday morning yesterday, we can see our price still continue to respect that bullish trend line. And in the last couple of hours, though, we saw an engulfing bearish candle here. But one thing you would notice about this bearish candle is the fact that as soon as it got into that bullish trend line, we saw some buying traction coming in at that point. And for the fact that that trend line also shares a beautiful confluence with that $73.90 level, which happened to be a significant key structure at this particular point in time, I will need to be very, very patient at this juncture in this market to understand how price action will be reacting to the structure, to this confluence here, to decide if we are going to be buying the US oil or we are going to be selling it for today. So what do we want to be seeing in the market here that will suggest that we want to be buying the US oil, and what is it that we are going to be seeing in the market that will be suggesting that we are going to be selling? And since we already have a yardstick that will be guiding our trading activity in the form of this trend line, and with a confluence around the $73.90 level, then we want to be seeing a breakdown of the structure to happen, and then we see confirmation come in the form of either a retest of the $73.90 level or the retest of that bullish trend line that would have been broken to the downside. Then we look out for this most important pattern in form of selling pressure below the structure on our lower time frame to anticipate the bearish move to the downside. So what this pattern really gives us is a clue that buyers are finding it difficult to climb back above that bullish trend line, and at this point we have a beautiful confirmation that we are good to sell the US oil for today. So selling the US oil for today will be valid anywhere below both the bullish trend line and the $73.90 level. So that is how we are going to be selling the US oil for today. Now, in as much as we considering the bearish momentum here, we cannot ignore the potentials of the buyers in this particular market, in the sense that since the beginning of this week, as you can see, it has been very, very bullish on this chart. And so the potentials of buyers breaking out or finding a new high is still very, very possible at this particular juncture in time. So if that is going to be the case here, we should also consider the possibilities of buying the US oil today. So how do we want to buy this? What do we want to see to buy this US oil for today? Well, the first thing I will say here is, if you had seen what was happening in this market during the later part of the New York session yesterday, you would have noticed how selling pressure has resumed somewhere right around the $74.70 level and the $74.35 area. So within the last how many hours is this? I think 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So in the last 11 hours here, we have been seeing selling pressure around that area to emphasize the presence of sellers at this particular juncture in the market. So what this simply means is that we might likely be seeing a breakdown of the structure to the downside, which will be a retracement of the proud leading price action. But if the opposite happens and buy pressure resumes, well, we want to be identifying the resistant line here, the highest point where price action has ever been for this week, which happens to be, hold on a second, we shall be identifying that in a moment. Let me do some readjustment here. Okay, so we have the $74.70 level. So I will be readjusting this to, okay, we readjust this to $74.70 level. So that is the level that is serving as the highest point price action has ever been for this week. So we have a new resistant line that will be guiding a potential bullish momentum in this market for today. So what we are going to be seeing here, if we are going to be buying, hold on a second, I'm trying to, all right, I think it's this one. So what we are going to be seeing in this market is to see price action break out of the $74.70 level for a confirmation of a bullish momentum to the upside. And then if a retest of structure happens, then this gives us a further confidence to be able to join that bullish momentum to the upside. So let's keep in touch with these expectations here, and be rest assured that I will be with you in the comment section on my TradingView platform to give you an update whatever happens afterwards. So if you have questions, feel free to drop your inquiries in the comment section. So while I move on to the next pair. So the next pair we shall be looking at this morning is obviously the GBPUSD. And on the GBPUSD, if we look at what has been happening here since the beginning of the week, you would have noticed though price has been quite choppy in the middle of the week. But one thing significant about this structure is the fact that price has been finding higher highs and higher lows in this particular market. And if you recall, on Monday morning, we were able to be part of a bullish momentum here after we saw our price action broke out of this channel that we identified during the early hours of the week, had between the 1.22500 level and the 1.22300 area. So we saw the breakout retest of the structure, which gave us an opportunity to buy, and it was at this point we had our first buy position for the week. Then we were also opportune to add more position at the breakout retest of the 1.22800 level, and in fact price action moved on both occasion. The first position moved about 80 pips, and the second position moved about 50 pips thereabouts on that one, before we started seeing some selling pressure resume in this market. Now this consolidation phase here that happened between the between Tuesday and Thursday this week we saw some stop losses, a couple of stop losses here, which took us out of that trade at a loss situation. And yesterday's live session, I told us all that we can be anticipating a trend continuation to the upside if price action breaks out both the 1.23500 level and the 1.23620 area. And this actually happened yesterday, and we were part of this bullish momentum to the upside before the sell pressure resumed. So price action moved about 85 pips before the sell pressure resumed in this market. And now with the situation we have here, what is going to be our plans for today? How do we intend to trade the GBPUSD? Well, the first thing I would like to do here is to readjust this bullish trend line here, which has been supporting the bullish momentum. So what I will be doing right now is to bring out my line chart, and then I will connect the higher lows, though we have a couple of higher lows here. So I will first of all have the major one figured out here, and that will be this one. So I will be thickening this line a little bit so that we can emphasize its importance at this particular point in time. So we have the higher low here, and then we're also going to be having the temporary one, which I will be using a lighter trend line here. And if we extend that out a little further into the future, we can see that it has been broken already. So I'll give this a lighter one. So we are going to be using both of the trend line to guide our trading activity for today. I don't want you to get any confused at all. Just follow me and pay attention. You will get this very well. So the second thing I'll be doing is to delete all this one so that we can have a better clue into what's going on here. So if we look at what has been happening here since the early hours of today, you would have noticed that we saw this sharp rejection of the 1.24200 level with a shooting star candle, which for us from a technical standpoint is giving us a clue into the presence of the sellers at this particular point in time. And with that situation here leading to the breakdown of the 1.23850 level, which also shares a confluence with that bullish trend line, we might be in for a bearish momentum. But at this point, we cannot jump into conclusion considering this bullish trend line that we have here, as there is a bust up here that could incite another wave of bullish momentum. as price action could actually drop into that bullish trend line here, and we could see some buy pressure resume where the 1.23620 level could turn out to be the neckline of that reversal pattern to incite another wave of bullish momentum. So for the bearish momentum we are seeing so far in the last couple of hours, we don't need to start jumping into a moving trend right now. We want to wait and remain patient here to see how price action will be reacting to this bullish trend line to decide if we are going to be buying or going to be getting ready to join a sell-off in this market. And interesting enough, that bullish trend line also shares a key structure with that 1.23500 level. Remember how important this level has been for us in the last 1 week in this market. Remember, it has been a strong selling niche in this market. During the course of last week's trading session, we saw how that area was serving as a resistance to buying pressure at that point. And then during the course of this week also, we saw attempt by the sellers to negate all bullish attempt by the buyers in this market. Now we saw the breakout of the structure happen yesterday, and I'm of the opinion that price could likely come back into structure to retest the structure by pressure resumes and that bullish momentum happen. So at this point we need to be very patient. We want to see how price will be reacting to the zone here between the 1.23620 and the 1.23500 level to decide. Now, if it so happens that price action breaks down that bullish trend line, as you can see here, break down both the bullish trend line and the 1.23500 level, then at this point you will agree with me that we are going to be back within the seller's territory, which has been existing for over a week now, as you can see what happened here. So if that happens, then remember, we are not getting too excited. This is very, very important for us to note here. We want to be patient and see a retest of structure, which will be giving us that confirmation in the form of selling pressure resuming right below either the bullish trend that was broken or the 1.23500 level. Then we could join that decline to the downside. So going into the New York and the UK session today, we have a key structure here, the bullish trend line and the 1.23500 zone, which with the structure here to decide what our next line of action will be. So on this one, we are going to be very, very patient in this market. So let's see how it plays out in the next probably couple of hours in this market. Then we shall be deciding what our next line of action will be. And one thing for sure is I will be with you in the comment section on my TradingView platform to give you an update on what my thought process are around that area when price action gets into that structure. So let's keep tabs on this one, and I will be moving on to the next pair. If you have questions, let me know in the comment section and I will be willing to be of help in that regard. Then moving on to the next pair here, and that is the XAUUSD, which is one pair that has been quite choppy here since the beginning of the week, though we had a sell position at the beginning of the week, and at the same time we had some buying opportunity during the middle of the week. Remember that we had this channel here between the 1,980 and the 1,970 at the beginning of the week, which triggered our sell position right below the 1,970 level here. And in fact, price action moved about 250 pips move before we started seeing the buy pressure resume in this market. And if you recall, on Tuesday's morning live session, we were able and successful to identify this reversal pattern in the form of a double bottom structure. We had the neckline of that reversal pattern at the 1,964 level, shares a beautiful confluence with that bearish trend line that has been resisting by pressure since the beginning of the week. And with the breakout of that structure here, yes, on Tuesday, we were able to be part of a buy position, which gave us about 100 pips before selling pressure resumed. And during the live session yesterday, we acknowledged the fact that buying pressure has resumed Hence, we had a demand zone between the 1,964 and the 1,960. If you had remembered, we identified this area yesterday, and we said because of the situation we have here, we would have no choice than to be looking out for buying opportunity. As we can see, sellers were unable to break down the structure, hence they didn't have that momentum to be able to take over the market from the buyers. And as a result of this realization, what we did here was to identify a yardstick that we want to be using to guide our trading activity for yesterday, and that was this bearish trend line that you can see on your screen right now. So what we simply did was to connect the series of lower highs here, and we got the trend line, and we said if price action continues to trade above that trend line, we shall feel comfortable in our buy position. And if you remember vividly, we had a buy stop order just right above the 1,970 level here, where we were looking out for buying opportunity. Though I did some update here yesterday regarding this current structure, where we saw some certain setups possibly going to be happening, which we first of all took advantage of before we were taking out on a loss on that one position. Let me show you quickly on my public platform how that trade went by. So we were initially in a loss during the New York session yesterday, before we position ourselves right above that 1,970 to join that bullish momentum to the upside. So this is my XAUUSD publication on the TradingView platform, and this was what we saw yesterday. Yesterday is 30th, so I will just scroll down to on the 30th of this month, and here we are going to be getting close to it now. All right, so we are right there. So this was after our live session yesterday. We identified this demand zone. We had a buy stop order above the 1,970, hoping that price will break out that structure to trigger our buy position. But one thing we did here, when I started seeing selling pressure resume, we saw buy pressure broke out. You must have moved your stop loss accordingly to secure position. Price broke through back to the downside, and at this point I quickly identified this, hoping that price will continue to the downside, but it didn't. We had a sell stop order triggered, but unfortunately we were taken out of that position in a loss. And what we said here, we had a buy stop order above the 1,970 area, and we saw the buy position triggered after we were taken out of that sell position in a loss. And since then, price action had continued to find higher highs, and in fact we were able to recoup the loss we made yesterday on that one, as we rode the move all the way to the upside. And during the early hours of today, we begin to see some selling pressure resume around this area, and I told us all that we shall be securing all our buy position at that point. So for those who are taking advantage of that buy position yesterday, well done to you guys for being on standby to have caught that move. Now that we are going into the New York and UK session today, how do we intend to trade the XAUUSD? Well, first of all, it's important that we have a background understanding of what has been happening here since the beginning of this week. And one of the key things that we want to take note of is the fact that price has been bearish this week anyways. And the reason why I've said this is simply because if you look at how the week started here, it started at around the 1,980, and throughout the most part of this week, price has been trading below that level. And we can see what happened here yesterday. We see that price is back into that structure, and in fact it broke out of that structure multiple times here, giving us a clue that buyers are trying as much as possible to break out of that 1,980. And with the situation we have here, we have something that looks more like a triple top structure, which from a technical standpoint is a strong reversal pattern. And if we look at this from a psychological standpoint, it simply tells us that buyers are trying as much as possible to break out of that structure, but they couldn't gather that momentum to be comfortable above that level. Hence the engulfing candle we just saw a couple of hours ago, breaking back down that structure. And now with the situation we have here, the 1980 level will be serving as the neckline of this reversal pattern. And with a breakdown of this neckline here, it's more mature for us to be joining a sell momentum in this market. So as you can see, we finally saw the breakdown. We saw a sharp rejection of the structure, and I'm of the opinion that we might be seeing some bearish momentum to the downside for today. So right now, for those who are actually taking advantage of this one right here, well done to you for being on standby to have caught that move. And so if you did, you want to be moving your stop loss right now to secure your position, you can move your stop loss to somewhere right around the entry point here to secure that position. However, for people like me who actually missed that opportunity, well, let's be patient at this particular point in time to see how price action will be playing out. So what I want to be seeing here for us to be part of this move is to see another retest of structure. If possible, that will happen before joining that decline to the downside. And if that does not happen, we might want to wait for a trend continuation pattern to happen along this impulsive move to the downside, which could come in the form of a bearish rectangular pattern, something like this on our lower time frame. Then a breakdown retest of structure, we can then join that decline to the downside. So this is what I will be looking forward to today. So on the XAUUSD, I remain bearish on the XAUUSD, and all we just need to do is remain patient and wait for structures to align for us to be able to join that move to the downside. So at this point in time, it's quite too late to join any position right now. So we just need to be very patient to wait for a tradable structure to mature, then we could join. And in that regard, be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update whenever I cite a mature trend continuation pattern that will be moving price to the downside. So that will be done in the comment section on my TradingView platform. If you do have any questions, feel free to drop your inquiries in the comment section, and I will be willing to be of help. So on the XAUUSD, for those who are not part of the sell momentum here, please just hold on and let's wait for a tradable structure to happen. And for those who are already in the sell position, kindly move your stop loss to your entry point to break even area, or some couple of pips of profit to secure that position, just in case price action does the opposite of what the sellers are saying here. So with that being said, here I will be moving on to the last pair that we are going to be looking at for today, which is the USDJPY. And it happens that the USDJPY has become the second most profitable trade for us this week. So following the USOil is the most profitable trade for us this week. Following the USOil is the USDJPY. Here, as you can see, that we have been buying the USDJPY since the beginning of the week. And remember what I told you about the 131.00 level earlier. I had a couple of calls during the early hours of the week that we might be selling the USDJPY, and actually I told them, and I told you guys here, that the fact that the 131.00 level has been a strong buying niche in this market since for the last 10 to 11 months is, for me, a sign that if we continue to see buy pressure around that area, we might likely be seeing a bullish momentum. And this was exactly what happened. Remember, at the beginning of the week, we identified this bullish trend line after connecting the series of higher lows, and with a higher low around that 131.00 level, I was strongly sure that a bullish momentum would happen. And if you had watched my video on the USDJPY during the course of last weekend, you will see I laid much emphasis on the importance of that 131.00 level in that video. You might want to watch that video to have a better understanding of what really went on around that area in the last 10 to 11 months. Now, going into the situation here, we can see we had multiple entries on the USDJPY after we saw price action triggered our buy position right above the 131.00 level here, and that was on Wednesday. And then we continue to add more positions, had the breakout of key structures like the 131.700 level, the 132.100 area, And then we also had another position here during the New York session yesterday, which was one of our key structures during our live session. So we added another one here, making the 4th position. Then we also added another one here, making the 5th position. And this morning I shared this one that we are going to be adding another one above the 133.250 level. You might want to look at my TradingView platform to see how these projections were made. And for the sake of clarity here, let me run through it quickly so that you can see how we started buying the USDJPY for this week. So we saw the situation is the 131.00 level. So we had some couple of buys around that area at the beginning of the week, but we were taking out at some certain level in that market, giving us a little bit doubt that that level might not even hold. As you can see, we saw some selling pressure come in on Tuesday and taking us out of that position. And on that Tuesday morning live session, I told us all here that above the 131.00 level, as you can see here, will be an area for us to look out for buying opportunity in this market. Though we saw some selling pressure take us out of that position, and it was at this point I was receiving some calls of selling expectation in this market, but I still insisted that if price action remains above the 131 level, we are going to be buying. So we had the situation figured out here. So we said a breakout retest of the 131.00 level will welcome a buy position here, and the breakdown of the 131.550 will welcome selling position. So you can see what happened, and at this point we had our first buy position that was on Wednesday, and we continue to ride the move all the way to the upside here. And during the early hours of today, I shared this update here where I said a breakout of the 133.250 level, I think, okay, will be welcoming a buy position in this market. So if you had placed your buy stop order around that area, you would have had your buy position triggered right now. And finally, I'm close to the TP target that was projected at the beginning of the week, which falls around the 133.690 level here. Now I'm tempted to extend my TP target further to the upside, but I will be doing that on one position here, which is going to be the last couple of positions I have here, to extend that TP target a little further. And where can we place that TP target at this point? So if we bring out the higher time frame here, I want to look out for the last key structure, which appears to be the 135.00 level. So I might want to extend that TP target into that zone, which will be dovetailing to about 220 pips in profit on this one. So let's see how far this is going to go here. And for those who are already in this trade, I would advise you to move your stop loss right now. And the most appropriate area to move our stop loss to is anywhere right below the 133.250 level. And it's always advisable that we give some room for price action to breach, so you could extend it down a little bit, but anywhere below the 133.250 seems most appropriate to place your stop loss in this current structure. And for those who had missed out on this opportunity, well, I will advise you to remain patient here. As you all know, from a technical standpoint, whenever we have a breakout of a structure like this, we expect that price will come back, do a retest of that structure in anticipation of another wave of bullish momentum. So if this is going to be happening today, then you want to be part of that move. So what we want to be seeing here is price dropping to the downside, then scale down to your lower time frame. You look out for buying opportunity. That is price rejecting that level. That is sellers finding it very difficult to break down the 133.250 level. Then price action transition. Luckily, if it transitions into a reversal pattern in the form of a double bottom structure, head and shoulder pattern, or whatever it is, then we can be part of that trend continuation to the upside. So this is what we shall be looking forward to on the USDJPY for today. Please ensure you've moved your stop loss accordingly, secure your current position, and let's wait out and see how far this bullish momentum is going to go. So on this note, I want to call it a day here. It has been a wonderful moment this morning, and we look forward to a positive day as we continue to monitor price action. Be rest assured that I will be with you in the comment section on my TradingView platform as usual to give you updates on what my thought process is based on the evolution of the price action on this instrument that we have been monitoring since the beginning of the week. So on this note, I wish you best of luck today. I wish you a wonderful and beautiful weekend, and I hope to see you later on Monday morning as we get prepared for the new week. And don't forget that I will be dropping the instruments we shall be monitoring for next week during the course of the weekend. So I will advise you subscribe if you are not yet subscribed, so that you can get a notification whenever I drop these updates. So thank you for watching, and I see you at the other side on my TradingView platform right in the comment section. Bye bye.